All right, I'm back. You should have sound. You should have charts. Thank you again for your patience. Let's get this thing started. First of all, for everything to do to make these events possible, you need to invite me back to not only my weekly webinars now scheduled for 7 a.m. New York time each Thursday, but also special events like this. So thank you very much for FX Street for everything you do, for giving us a forum here, a place to collect and or to gather and talk about all things foreign exchange. Also, thank you each and every one of you for carving out some time out of your in many cases busy day. I really appreciate the time you devote to this sort of thing. And I guess with that, I dispense with a disclaimer. This is not going to provide specific trade alerts or recommendations, but I'm going to kind of call it as I see it in terms of, I already mentioned earlier, the implications for price action. Could be see some very, very volatile, very unpredictable price action in response to this Fed statement. So let's be very careful with that. I know plenty of professional traders who aren't even looking at the charts right now. So keep that in mind. Now, sometimes there's a trade to be had, and I may discuss the possibility about if you're more aggressive, you might consider this or that. But I'll tell you, any trade you take today, I highly recommend you take it on a demo account. Anyone trading on a live account in this, I highly, highly recommend you scale back on your leverage. And another something also to consider here as well is that if what Bernanke has to say, or the statement coming up in 10 minutes, or Bernanke's comments at the press conference starting in 40 minutes from now, if I don't expect a whole lot from any major change in policy, but if we do see a major policy change or a major clue from Bernanke or the FOMC, it's likely to be something you can trade tomorrow, starting, say, around the early part of the London session. And this post-FOMC move, if it's significant, it could, it could last for, at least the rest of the week, if not longer. I kind of doubt that, and I'll discuss why a little bit. But let's, first of all, I want to grab some graphs here. One of these I just realized is not properly labeled the way I normally like to label graphs. I've added some graph files to a flash drive on a separate PC. I know I'm a little belated to do this, but I'm just now taking that flash drive out of my other PC and going to insert it into my current coaching PC, which means a window is going to pop up in front of my charts. By the way, I could walk through some charts, but technicals could have little to no bearing on price action on the EUR/USD in the next hour or so, so don't get too wrapped up about that. One thing I guess I could sum before I show you the graph is, the drawing tool is already activated. I did a webinar earlier. We talked about, first of all, the way the 200-day moving average on the euro, identified by that lime green line on the daily chart. That 200-day moving average, as I have the chart, is situated somewhere 2870-ish. Yeah, we did dip below it yesterday, a little bit below it earlier today, but you could say by and large that the 200 average, it's not only important to traders who look at charts for the EUR/USD, but important to traders for several other kinds of financial securities, stocks, bonds, you name it. So the 200-day moving average is held up, and today is the bar for the day, not far from the 5 EMA. So moving average is seemingly playing a role in price action. Not just moving averages, though. There's a K965 area being important, and I'll continue on with technicals. I'll show you the graphs in a moment. Here's a daily chart. You can see the 200-day moving average on this daily chart. You can see a series of lower highs with the red trend. That trend line, who knows, may come into play in the next hour or so. Again, I'd rather expect an immediate reaction unless Bernanke sounds uniquely dovish. But that trend line is something to keep in mind. What we discussed today at my webinar, my free webinar at metatraders.com, probably best seen on a 4-hour chart. And we talked about the 2965 area. I just had a horizontal purple line at 2965. Hopefully on this 4-hour chart you can see the case for that. Low established earlier this month in this area. Highs established, what was it, earlier this week? Not far from there. So we're in sort of a hold mode here. Okay, some graphics for you. So what's the market looking for here? What the market's been looking for really ever since the start is this. Market has been getting ahead of itself and trying well in advance what a central next. What will be a central bank's next move? Well, in the case of the Federal Reserve, somewhat as odd as it seems to me, the market is seemingly anticipating that, especially given some signs of improving economic data throughout the U.S., which I'll show you in a moment, that the market's anticipating that the Fed may show some hints, some subtle signs that it's edging little by little towards either policy, which means raising rates, like happens that soon, but another form of tightening policy would be scaling on their quantitative easing program, scaling back on their bond purchases, which they initially announced back in September of last year. So the market is always on the lookout for hints from, say, the Federal Reserve Chairman or other key officials at the FOMC. That's the Federal Open Market Committee, who decides on monetary policy on behalf of the Federal Reserve. The market's always looking for clues from these officials, particularly Bernanke, about the Bernanke or other officials' stance on the U.S. economy. Is it getting better? Is it getting good enough to the point where the Fed's beginning to consider, again, scaling back on these QE programs? If and when the market senses that the Fed's getting ready to scale back on QE, that would be a pop color. If the market perceives that the Fed's not ready to do that yet, if the Fed retains its current stance, current outlook of continuing with so-called quantitative easing or QE, that could certainly be a dollar negative. If I had to guess, the Fed's going to stand pat. He's going to stay the course. Bernanke's going to stay relatively dovish, meaning he's going to favor continuation of stimulative policy as opposed to opening the door to scaling back, and that could be a dollar negative. But does that mean you should long the euro here? Absolutely not. The euro could easily drop 50 or more pips and then rise pips after reading the statement or hearing Bernanke's comments at the press conference starting until 35 minutes from now. So again, anything can happen. Please be very careful if you are going to trade this pair. Graphs. Let me dig up. I don't have much time for this here. I've got a little bit though. One notable one is this. Comments by Chicago Fed President Charles Evans caught my attention following the release of the latest NFP report released March 8th. Charles Evans, he's a noted dove at the Fed. Evans said this. Now, it's his opinion. Now, maybe not everyone agrees with Evans, but Evans said this. He'd like to see something like more than 1,000 jobs created by the U.S. according to the establishment survey of the NFP report released each month. Evans would like to see something like 200,000 jobs produced each month consistently for about 6 months running. Well, we haven't seen that. What this graph shows is a shaded area up to 200,000 jobs. And this is the headline NFP report going back to early 2011. And we've had some months where the headline NFP number is just above 1,000. Last month's number was 236,000. You see on the right graph, but we haven't seen consistent jobs production in the U.S. The jobs have come in spurts, if you will. So one reason Bernanke would stand pat. Another reason, and I'm going to wrap this up soon and get to focus on whatever the Fed statement when it comes out and what it says, is housing starts. This is a graphic showing housing starts going back to early 2005. You can see it in housing starts beginning 2012 or this year. So there's been improvement in housing starts. However, you must put the recent recovery in housing starts in context. Look at a graph starts going back to 1970. Now you can see that highlighted recovery in housing over the past several months. All we housing starts is go levels of starts seen near the bottom of a major going back 40. So the U.S. is looking better, yes. Is it fully healed? Arguably not. Now, I've got more data I can show you, but those are the big ones, in my opinion: the labor market, and then the housing market, of course, which of course are interrelated. So we're about a minute away from the statement. Here's what's going to happen. The Federal Committee, or FOMC, will release a statement to their decision on what to do with interest rates was expected not to change. They're also, the market may look for, market's really going to look for any change to language in the statement, which I really doubt they'll make, but I really doubt any changes to language, but certainly we'll be watching for that. I suspect the real market focus is going to be Bernanke's press conference, which will start from now, and the Fed projections are due to be released at about that time as well. And I'll talk about the Fed projections in a moment. In the meantime, get a little fluctuation on the euro, but that's pretty typical, a little fluctuation on the dollar before the release of the Fed statement. Sound still working okay? It's 2 p.m. Fed statement should be out any time. As expected, the Fed held the Fed funds rate at 2.25%. Oh, they issued the updated economic forecast. I thought that might not happen until 2:30. So apparently their updated economic forecast has been released as well. That's one thing like the dollar here. You can see the dollar weakening. The euro's nearing its highs for the day. So we're at daily 5 EMA back near yesterday's high. You can also see we're near to a green line in the up portion of this hourly chart. That's the hourly 200 EMA. Daily M4 just about that all prospective source of resistance, but given the reaction to this news, it's very possible that we break that. No guarantee. Again, what I mentioned earlier was it still applies that we could see some unusual volatility, sharp move up, sharp move down, and it could be flippy-floppy, so be careful. I haven't read the statement just yet. They mentioned more restrictive fiscal policy. That's probably a reference to the so-called U.S. sequester. Some of you may recall there's been across-the-board budget cuts in the U.S., the so-called sequester that was agreed in August of 2011. And so cuts to government spending, particularly in the Defense Department, may result in, or maybe is resulting already, in a reduction in jobs, and that could certainly weigh on the economy. So that's probably one big reason why the Fed would stick to its guns and keep so-called accommodative policy, keep its bond buying program going, which is this whole U.S. sequester issue and the government budget cuts and their implications for the economy, especially in the defense industry. Another reason, which I haven't seen that the Fed's referred to yet, but they probably have referred to, is they may refer to, if not in the statement, then Bernanke may refer to in the press conference, the risk in Europe. Ongoing risk in Europe. Still haven't made the most convincing move yet. All we're doing is testing today's earlier highs on there. Yes, we did officially make a new high for the day, but we're still in a zone of resistance. And again, it's the ultra aggressive trader who's making a scalp short, and that's not my cup of tea at all. I don't recommend it. I'm going to go to the Fed's website and open their statement and look for any clues here. Wouldn't surprise me if the euro's pretty much where it is right now in 30 minutes time, as the market could this may be the market's initial reaction. Now the market's going to focus on what Bernanke has to say, or perhaps doesn't say. I'm opening the statement now. By the way, I'm going to federalreserve.gov. If you want to play along at home. federalreserve.gov. You'll see a link on their home page pointing to FOMC statement. And I'm skimming through that right now. Again, I'm looking for changes of the last month's statement, which I don't exactly have memorized, but I can check some comparisons to last month's the previous statement in a moment here. But I'm just looking for scanning the statement right now to see what jumps out. Perhaps my news provider, Trade the News, will help me with that comparison or contrast as well. Fed does refer to a continuing elevated unemployment rate. I mentioned the earlier reference to fiscal policy being restrictive. They do cite the improvement in labor market conditions, but don't sound overly enthusiastic about that just yet. I've seen some of the economic projections, and the Fed did lower its GDP outlook for this year, and about the same outlook for 2014, 2015. Hardly any change to the GDP outlook. So that's one point worth noting, is that the Fed's outlook for economic growth in the U.S. is measured by gross domestic product, or GDP. The Fed's outlook really hasn't changed. So I mean, you can spin it how you want. Either it's not a positive, or either that's a or negative, which the market's initial reaction is suggesting, or it's just a lack of a dollar positive. Looking at their projections for unemployment, modest drop in their projections for the unemployment rate in 2013, but not much. Thank you, Black Cat, for the post there. Well, we'll see what Bernanke has to say, but I'll give you just one of several different scenarios. But the one I'm about to explain seems plausible to me. Perhaps, given nothing new, or no new bad news out of Europe, specifically. Given that for now, plus if Bernanke, you might say, flaps his hawkish feathers, so to speak, not hawkish but dovish. If Bernanke flaps his dovish feathers and again expresses or emphasizes concerns about the strength of the recent recovery and blah blah blah, and in other words, if the market perceives, which it rightfully could, if the market perceives that Bernanke is going to stick, and the Fed's going to stick with its current program and continue on with QE, no signs of edging closer to a tapering back or an exit of quantitative easing, then the dollar could continue to weaken here. But if I would guess that all things being equal, that the market at some point will probably look to resell the euro. Now, where that point is, as good as mine, I don't know, but I would have to say that it's again, until I hear Bernanke's press conference on what he has to say and get a close look at the economic projections. If the Fed stands pat for a while, this euro here could be again increasingly be largely dictated by sentiment towards Europe, which at the moment I'm actually a bit impressed that the euro has held up the way it has in the light of what's happened in Cyprus. Not that Cyprus is a huge country, but it's the implications of what's been happening in Cyprus and the suggestions of a levy on bank deposits in Cyprus. That's by many accounts, that's amazing. And many commentators, economists, analysts, and such look at that and think, what the heck are the European officials thinking? Although I see that some have emphasized the reasons why Cyprus is a unique case and should not be considered a something that could occur again and again, but I don't know. So anyway, nothing really has happened here thus far. A little fluctuation, a bit of weakness now. Let's look at let me show you some other charts. We're going to look at the dollar's reaction against other major currencies. Can we call the jump in the euro? Look at the dollar yen go here. Of course, by all accounts, it's actually a very mixed picture here. Very mixed picture. That is on the dollar. Perhaps the dollar finding its mojo. Again, Bernanke said nothing yet. We're still waiting for the start of the press conference. It's about every 3 months that what will happen here is that we got the FOMC statement, and the market's digesting that right now. And you can see that the digestion of this ball has involved an up and down move on the euro. A little jump on the dollar yen there as well. But again, at first glance, I'm not seeing any major surprises in the statement. So the focus should then turn to the Bernanke's press conference. And what I was going to say was that this doesn't happen at every Fed meeting, at every FOMC event. It's about every 3 months, I believe, that every quarter that Bernanke, 30 minutes after an FOMC statement issuance, Bernanke will conduct a press conference. That's in contrast to ECB President Mario Draghi, the president of the European Central Bank. He conducts a press conference after an ECB rate decision virtually every month. This is something new. I think the Fed instituted this, I believe it was last year. So, again, that's what the market's going to focus on. And for now, the dollar's firming up, though. Look at the dollar yen taking off. Looks like dollar yen creeping above that. Notice on this dollar yen, the broader trend has been up, really since mid-November. You got the gap down in response to the events in Cyprus over the weekend. A low established near 94.30. You could call that a higher low there, and perhaps it's more up. Of course, no guarantee we can break those highs around 96.60, but so far so good for the any dollar yen bulls. That is, if you say you took a long either yesterday or earlier today and holding on to it. Well, we've got some 20 minutes again before Bernanke starts speaking, so I'm looking for a little interaction here. I'm not trying to sound critical of everyone just kind of sitting back in and listening here, but what's on your minds here? What's a question about if you got a question about any other currency, any other pair, maybe it's you got a question about stochastics indicator, maybe you're wondering, what's divergence, or maybe it's more of a so-called fundies or fundamental question. Maybe you're interested in the Canadian economy. I don't know. Let me know what's on your mind. I mean, believe me, I can find things to talk about, but I want to make sure that you realize that if there's a good time to ask a question, it's now, because I'll spend more time focusing on what Bernanke is saying come 2:30 New York time, which is a little less than 20 minutes from now. Chris asks, why are there gaps? The simple answer is that orders build over the weekend, and then when the market reopens, the orders are just all filled at once. But usually those gaps occur. Those gaps occur these days when a major news event unfolds over the weekend. So, some retail traders, for example, it's more to it than that, but I'll explain it in kind of a simple way. Just imagine, say, retail traders, in certain cases, I'm sure some bigger traders like hedge funds as well, will get word of a news event. In this case, in this past weekend's case, it's Cyprus, and Cyprus looked poised to reject the bailout that was seemingly imposed upon them late last week, and so as traders got word of that, they put in orders over the weekend to either to sell the euro or to get out of any euro long positions they were previously in. And so when the market opens, boom, you get this big gap as the orders are virtually filled virtually immediately. Now, that may not be the most accurate interpretation of what happens, and I don't think it is, but that's probably arguably the easiest way to think about it. Easiest way to think about it. Roby, honestly, the Euro USD, even though, as I stressed earlier, the Euro is volatile, it's still the most liquid, the most heavily traded currency pair on the planet. But, Roby, I want to make a point here. I'm looking at a 5-minute chart for the Euro. And I'm going to freeze this chart so I can emphasize this. And Roby, I don't know about you, and I'm kind of kidding when I say this. I'm not trying to be critical of you, Roby, but when I look at that, I'm thinking, you know, I don't want any part of that. I don't want any part of that. I need to see some direction. I need to see some conviction. And again, the most liquid, the most heavily traded currency pair on the planet, and that's a look of a market that has no conviction right now. So we're essentially straddling the London session. Actually, it wasn't London. It was actually early New York session highs today, established here in 2950. So we're ready to continue on with the answer to Roby's question. Here's what you may be looking at is this. Again, we'll hear what Bernanke has to say starting in about 15 minutes from now. It may be something it's not, you can't decide upon, or I may not be able to decipher until I read hear a comprehensive or read a comprehensive transcript of Bernanke's statement plus his answers to questions, which I'm really not going to have the chance to do that comprehensively while I'm conducting this webinar. But let's put it this way. The so-called smart money, here's what I'm guessing I would think the smart money is going to do, and it's something what I'm going to do. Let me go back to another Euro chart. That Euro chart I showed you earlier with the moving average, 200-day moving average, and the trend line. See the Euro getting green again. Okay, here's a daily chart. I can imagine more than a few traders and perhaps more than a few hedge funds looking for something like this. Does Bernanke say just enough in terms of dovish talk, in terms of a need to continue easing, to put the dollar on its heels, to fuel some dollar weakness, to lift the euro up just enough to a technical level where bears might find it appealing to sell this pair? I would guess that there's certainly a group of traders out there, a group of hedge funds, thinking just that, hoping Bernanke says something to spark just enough of a sell-off on the dollar, just enough dollar weakness to lift the euro USD up to a level where they could then sell it again. Now again, where's that going to be? Is it, is the red trend line? Is it? Let me show you another example here. One thing I'm struck by is this. Perhaps a rise up to 3070. Of course, you could really look at the big picture and fit the move down from the early February high. The 38.2% fib of that move down. Let's zoom out on this chart. So I just applied a Fibonacci study of the move down from high number 1 to low number 2. The 38.2% fib retracement level, that's a very common Fibonacci level. 38.2% fib right there. That's, what is that, 3170, 3180? Notice lows here, high there. Notice some lows here. So, I mean, that area has some history to it. Now, are we going to get there today or tomorrow? I really doubt it. I really doubt it. But my point is, what if Bernanke says enough just to put the dollar under pressure? What if we get some at least moderately positive news out of Cyprus in the next day or two that could lift the euro back up? And you got possibilities for euro bears, one of these two trend lines or that fib area. Now, in terms of today's trade or tomorrow's trade, again, it could be a long. Of course, first of all, for the bulls, I think first and foremost, you got to see a break above this 2965 area, which I highlighted earlier by the horizontal purple line. Wait for a break of that and then retest. Hope you want to play that. So I guess to answer the question, can the Euro USD close the gap? Yeah, sure it could. It's quite possible. Now, to be more specific, well, I guess I'm kind of repeating myself already. What's going to prompt that? Well, again, consider the origins of the gap. Arguably, the origins of this gap are the situation in Cyprus. Are we going to get resolution to the situation in Cyprus this week? Well, your guess is as good as mine. I frankly don't know. I'm not sure, but I thought I saw reports just moments before I took the mic here that banks in Cyprus are going to remain closed at least tomorrow, if not the rest of the week. So, I mean, the timing of a new bailout plan for Cyprus, when will that be agreed to, and is that something the Eurozone finance ministers will find as suitable, acceptable? I don't know any more than you whether or not that could happen this week. I do see that the member of Cyprus' parliament said that he was confident, or I think it's a he, confident that the government can reach an agreement today. But whether or not that's going to really happen, I don't know. But some sort of bailout for Cyprus could be, or something that isn't so detrimental as the original plan that involved a levy of all deposits at all Cyprus banks. That could give the euro at least a near-term boost. It can help close the gap. If the gap doesn't close tomorrow, then perhaps it closes by the Friday's New York morning session. But again, it's not a prediction. I'm just saying the focal point here, barring any surprises out of Bernanke, the focal point I think really turns back to Cyprus after this FOMC press conference starting in less than 10 minutes. Now, I've been talking in tones of, been touching on the theme of Bernanke sounding more dovish. Maybe I'm wrong about that. What if Bernanke comes out and it's so dicey when it comes to central bankers. I don't envy their position. Selection of words when it comes to the conversations, to dialogue with the media is so important. We're in an era right now where a major central banker like Bernanke at the Fed, like Draghi at the ECB, one word can totally shake up, at least for a session or a day, a major currency pair like the euro. One word can do it. If you don't believe me, consider this. Going back to the daily chart for the euro. The big move on the euro in here, that fairly big drop on the euro that day was on the back of two words by ECB President Mario Draghi. Wide discussion in reference to, in response to a question posed to Draghi that day about the discussion about an interest rate cut. Draghi mentioned a wide discussion, and boom, the euro just sold off that day. In early January, you got a notable rise in the euro. And that was another comment by Draghi. Draghi, and again in reference to a similar question about interest rate discussion, Draghi said just said one word: unanimous decision to keep interest rates unchanged. And that's the euro immediately jumped when he mentioned that, when he responded to that question. Now, I'm only citing examples from Draghi. I'm citing examples from Bernanke, but they've happened with Bernanke in the past as well. Yeah, Super Mario. Everyone's familiar with that Black Cat's reference to Draghi? As I see it on the euro, that's what's really at stake here. I go back to the daily chart here, zoom out. I mean, kind of an interesting moment in time here, both technically and fundamentally for the euro as I see it. Black Cat refers to Draghi's comment back in late July about doing whatever it takes to preserve the euro. That was back in here. You see the euro jump there and up ever since. It was during a speech at an investors conference in London in late July that Draghi said something effective. We'll do whatever it takes to Kuroda talking right now. New governor of the Bank of Japan reporting and making some comments. Of course, it's not shocking. He's calling for bold easing. Anyway, Draghi made a reference to the doing whatever it takes, and the market's interpretation of Draghi's comment about doing whatever it takes, the market's interpretation was that, hey, maybe the ECB is going to announce a new bond buying program. Well, sure enough, somewhere around in here, early September, the ECB does announce a new bond buying program. It's henceforth referred to as the outright monetary transactions, or OMT. But notice we're pretty much back where we were on the euro in early September of last year when Draghi announced the bond buying program. So I guess my question mark is this: given the events in Cyprus of late, it does, in my opinion, kind of bring into question how much firepower the ECB can actually bring, how much they can bring to bear. So assuming we recall, we had an election in Italy recently in which didn't quite go as planned. Part of the reason for this downward move in the euro I'm highlighting right now is increased concerns about the political situation in Italy. The question that still hasn't been answered yet is, can Italy form a government that can get stuff done? That hasn't happened yet. And now Cyprus hits the news over the weekend, and Cyprus is rejecting a proposed bailout. So lots of questions here. We're also technically in an interesting zone. In addition to the daily, the 200-day moving average, this horizontal bright green line on the chart, you can also fit the move out from the last year's low to this year's high thus far. And here is a 50% fib of that move up from low number 1 to high number 2. We've also seen some historical price action around this zone before. So, big question mark. Is it only a matter of time before the recent downtrend continues, or do we stabilize here and eventually perhaps turn up? Yeah, Black Cat, you make a good point. That is exactly the day it topped. It did top on an NFP day. In fact, let's look at that again. Shoot, can't find it now. I have my graph, NFP graph, and I can put it back in a different file. Oh, the Fed, the Bernanke press conference is due to start here in just 2 or 3 minutes. There's going to be a lot of attention paid to that. And again, let me be clear. There could be some unusually volatile, unusually uncertain reaction to what Bernanke has to say. So be very careful. Again, it's not crazy at all to keep your hands off the mouse and just watch how this plays out and see if Bernanke says anything meaningful. And if he does, it could set up tomorrow's trade, maybe the Asian session, maybe the London session. Black Hat, when you refer to correction, do you mean a correction up of the move down since the early February high? Yeah. I'll tell you, bigger picture, longer term. There is again, it may not be tomorrow or the next day or even for days to come, but I for one have seen a building case for You might even call it sort of a new era for the dollar. A new era of perhaps, it could be a firmer tone of the dollar in the months to come. And one reason for that, I don't have time to get into all the specifics, although I can do so, say, at tomorrow's webinar here at FX Street, beginning at 7 a.m. New York time. I do another webinar here, but it's one reason for that is simply put, relativity. Anyone can argue, and rightfully so, especially given the NFP graph I showed you earlier, anyone could rightfully argue that the U.S. economy is struggling at best. But relative, and here's the key term, relative to other economies, particularly those across the so-called pond, the British economy, most European economies, relative to those, the U.S. isn't looking so bad. And that's always the key when it comes to evaluating currencies. In the medium and long term, which ones should be strong, which ones should be weak. I mean, by the way, Bernanke's walking into the conference room at the press conference at the Federal Reserve right now. So Bernanke will start speaking in a moment. I would expect that Bernanke's not going to say anything that meaningful early on. I'm going to turn on sound. I'm watching this on CNBC. Actually, I'm going to watch on Bloomberg instead. Not that it matters. Usually some pretty standard language from Bernanke in this early statement. I don't expect to see much. He's probably just, if anything, just going to expand upon, add a little color, a little detail to the Fed statement released a little more than 30 minutes ago. If Bernanke says anything to really shake up the dollar, good or bad, I would say it's likely to be during the course of answering questions from reporters. And I'm thinking about 10 minutes from now. It's my best guess. He may spend about 10 minutes reading a statement and then fielding questions. So if you look at the Euro USD, I mentioned the early moves in response to the FOMC release. Go back to the 15-minute chart. What was I looking at? A 5-minute chart? I was actually looking at a 5-minute chart on another chart. But again, just sum it up. There's our trading range. So some 40 pips there, and the Euro's still stuck on that. It could remain stuck until Bernanke says anything meaningful, which, again, he may not. He may not. Would not be surprised if the Euro returns back to the middle of this recent range as Bernanke wraps up his prepared statement. And then, again, what happens from there will depend on how Bernanke responds to questions. No, Black Cat, I would recommend waiting for dust to settle. See, and here, it's a great question, Black Cat. Here's the reason why I say that. Actually, there's several reasons, but one, the biggest reason, perhaps the biggest reason, is this. By the way, let me, I'm going to go to another viewer showing the dollar, not just the Euro USD, but the dollar against some of the major currencies. One big reason I say that is this. Think about a report like non-farm payrolls or NFP in comparison to what we're dealing with here. In the case of non-farm payrolls, although I don't agree that that traders should do this, but the reality is the market's moves, not just the currency market, but the bond market, the stock markets. Markets moves, and even the commodities markets, the markets moves in response to a report like NFP largely move in response to the headline number. In the case of non-farm payrolls, the headline number is derived from the establishment survey. The establishment survey is a survey of mostly larger businesses in the U.S. So the so-called headline number from the NFP report, that's what moves the market the most. You could say a close second perhaps is the unemployment rate. That's what. Now there's always some details in the NFP report which could suggest how strong or weak the report really is relative to the headline number. But again, my point is with NFP, it's an easier read. It's an easier read for traders. you have a forecast or a consensus number based on surveys of economists, and so you know that going in. If you get a number that's better or worse than expected than the expected number, or a number that's notably better or worse than say the last month's number, or the average of say of the recent month's numbers, I mean that's something easy to do usually easy to do a comparison on. By contrast, rather than comparing, say, an actual number to an expected number in the case of NFP, with in the case of Bernanke speaking, you're interpreting, central banker speakers, you're interpreting central banker comments, which are more widely subject to varying interpretations. Does that make sense? Now, every once in a while, a major central banker like Bernanke will say something that's just obviously, very obviously a dollar positive or very obviously a dollar negative. But far too often, you'll have a central banker like Bernanke say something that's I like to call sort of a copy and paste, where they're saying a lot of the same kinds of things they said last time they spoke publicly, and you end up getting some sort of like wishy-washy type price action. So Black Cat, Black Cat. You're pointing to the what I consider usually the standard approach to trading this. Not the only, but a standard approach to trading FOMC is let the market react, and then get the market time to digest what's been said or perhaps not said, and then look for a setup especially if you're based in Europe, look for a setup during the early part of tomorrow's London session, or perhaps the latter part of tomorrow's Asian session. Notice again, we're back in the middle of the recent trading range. We've been straddling, Euro's been straddling 29.50 for hours now, and we're still doing that. Dollar yen's on the move a little bit, but that dollar yen move could be due in part to a recent comment by incoming Bank of Japan Governor Kuroda, who's calling for bold easing. But actually that's no surprise. So don't make too much of that recent move on dollar yen. Consider the Japanese yen and the move we've seen, especially against the dollar, in the past several weeks. It's been historically a dramatic move on dollar yen. Now dollar yen around near 96. Put that in perspective. Bernanke still speaking, by the way. I don't see Bernanke again. I don't see him saying anything unusual or surprising. Yeah, here's a daily chart for the dollar yen. Comments by then LDP leader Shinzo Abe, now the new Prime Minister of Japan. He made comments back in mid-November during a debate with then Prime Minister Noda. Abe back in mid-November made comments about looking for the Bank of Japan to get more aggressive in its policy easing. He actually made explicit references to printing unlimited yen, and that's what really started this recent persistent sell-off in the Japanese yen, which means up for the yen crosses, including the dollar yen here. Notice how the dollar yen struggled around the 94 area for several days there. You got this move. That was in response to the Spanish election. Surprising results from the Spanish election, and it's been more of the same since. Perhaps a bit of role reversal there. Area which was a resistance in days past may have become support. Now the question is, are we continuing higher, or is this going to be a lower high relative to the highs in last week? So listen to Bernanke here. Bernanke's just finished, and now I'm ready to field questions. Oh, Black Cat, so you comment about the Italy election. Yeah, spot on. That's exactly what it was, right? First question about QE. What a surprise, huh? Reporters asking Bernanke to provide some of his own so-called color on what he's looking for, specifically in the labor market, as signs of improvement. I suspect he's going to be rather vague on this. I know I'm quiet. I'm just listening to Bernanke right now. Actually, while Bernanke says this thing, I'm sure Trade the News, my news provider, will point out any notable comments he makes. So, by the way, FX Street, how long do I have? Am I done in 5 minutes, or am I finishing in 20 minutes? I don't recall which. So, actually, anyone who knows, could you please clarify? By the way, I'm not in a hurry to leave. I'll go as long as you let me go here. But I want to be respectful to anyone who's following me. That is, who has a webinar afterwards, if there is such a thing. Yeah, what Bernanke is saying, according to Trade the News, I've kind of caught bits of it in his comments I'm listening to on Bloomberg TV. What Bernanke is saying, it's really nothing new, is that, I've heard these references before. Bernanke is saying that the Fed may taper back, scale back a bit on its bond per. Right now, it's like $85 billion per month. Maybe they scale back to, I don't know, $65 billion, $55 billion, $45 billion. I don't know what the number's going to be, but that's it. So as opposed to think of a spigot for turning on and off water in the sink. Markets like to think of either water on full or totally off. Well, what Bernanke is saying, and I think rightfully so, is that it's not going to be that way. They're not going to go from the spigot opened fully and water flowing quickly in the sink. Bernanke is saying they're not likely to go from that to shutting the water completely off. They're going to gradually turn the spigot and turn the flow of the water down. Actually, just clarify that Bernanke says they may do that. They may adjust the flow rate along the way. But you can see on the Euro-USD, there's really no reaction to this. So the market's not hearing anything from Bernanke. It's causing it to freak out in any way. FX Street says we have 5 minutes left. Well, Black Cat, I don't know if you're able to attend, but I am doing another webinar at FX Street tomorrow. It's tomorrow. Well, it's tomorrow. Virtually tomorrow is everyone's time. So what is it? In 16 hours? In 16 hours and 15 minutes, I start another webinar at FX Street. So if you can make that great, and at Black Cat, if not. And I won't say this long at FX Street, so I don't want to be disrespectful here and step out of bounds. But I have begun doing 1 hour per day free webinars at metatraders.com. I want to post the website, even though the registration there is the registration process needs to be fixed, and I'm going to fix that in the coming hours. So if you go to metatraders.com, which I'm currently working on that site, if you go there and try to register it, you may have trouble with the registration process, and I apologize for that, but I'm aware of the problem and it's getting resolved. But I will be doing some webinars there periodically. And I bring this up because one of the webinar times I'm considering for some periodic free webinars is the time, I believe, FX Street, correct me if I'm wrong, but I don't know that you guys currently offer any webinars during the Asian session. And so I'd like to, from time to time at least, offer some webinars, just some general educational type webinars during the agent session. Anyway, I'm not trying to overstep the FX Street's bounds here. So I still do webinars here each week and love doing webinars here. But again, I will be here and back here in about again a little over 16 hours. Was that right? 60? Yeah, 16 hours. Canadian dollar firming up for a change today. Oh, I was going to make a point about dollar yen. I mean, from time to time, a dollar yen can react to things like, for example, we just seen some reaction here to comments by incoming Bank of Japan Governor Kuroda, and as we saw the gap here from Friday's close to Monday's open. The Japanese yen can respond from time to time in its traditional role of risk on, risk off. You know, if things get nasty in Europe, I mean, nobody hopes they will, but if they do, the Japanese yen could rally, which means down for dollar yen, down for the yen crosses. If things get ugly in Cyprus or maybe if I don't know, maybe there's renewed political turmoil in Italy, whatever the case, the Japanese yen could rally in response to that, at least ever so briefly. I would guess, though, you know, let's say Europe stabilizes or Cyprus stabilizes here soon, or in Italy stabilizes, and I would assume that the next major move for the Japanese yen is going to be in early April, especially if, maybe even the day leading up to, and especially the day of and days following the Bank of Japan's next meeting. Probably your next major move. Now, maybe I'm exaggerating a little bit. It may not be that big of a major move, but my point is this, and I guess I can wrap up. With this since I've kind of reached my allotted time. And by the way, thank you for everyone who's attended. Thank you again to FX Street for making this event possible. On the let me get rid of this chart. When it comes to the Japanese yen and this broad sell-off we've seen for several weeks now, the market, I suspect the market's going to show some patience and give the Bank of Japan time to, give the new Bank of Japan governor and his new deputy governors time to find the restrooms at the Bank of Japan facilities and perhaps build a consensus amongst the other Bank of Japan voting members to agree to more easing policy. But at some point, the Bank of Japan is going to have to deliver. I mean, this relatively sharp rise in all the yen crosses, including the dollar yen over the past several weeks, it's on the back of nothing more than comments. I mean, the Bank of Japan, for all practical intents and purposes, has not done anything new, meaningful yet. Nothing. Yeah, they've made some relative baby steps in the past couple meetings, but nothing significant yet. So my point is that at some point, I don't know if it's going to be in early April or perhaps as we get deeper into the year, maybe in the summer, at some point the market's going to have sort of a put up or shut up attitude when it comes to the Bank of Japan. Either the Bank of Japan delivers more aggressive policy easing and maybe not in the next couple months, but maybe as the year unfolds, we'll start seeing some of its easing measures, if it implements any, affect things like inflation measures. But if the Bank of Japan doesn't do a whole lot more than the previous governor and his deputies did, or if we see that Kuroda and his deputies are having trouble convincing the other members to do aggressive policies, and if we see instead only modestly more aggressive steps, then that certainly could set the stage for a yen rally at some point. Now, again, is it going to be following the April meeting or the next meeting after that? I don't know. We'll see how much time the market's willing to give the Bank of Japan to deliver before the market says, hey, this is enough is enough. The Bank of Japan not doing it, not getting it done. Let's buy back the Japanese. I'm not saying that the dollar yen's going to fall back all the way to levels seen in mid-November, but there's certainly some scope for a correction in the yen crosses if, and I stress if, the Bank of Japan does not impress the market. And with that, I bid you adieu. Have a great day. I don't know how long the FX Street is going to leave this room open, but I am here. If you have any further questions or comments, I appreciate Chris and everyone else. I appreciate your time as well. Feel free to contact me. I'm available for one-on-one mentoring. And if you just have something on your mind, want to show me a chart or just ask a question, if you think later about a question you wanted to ask about charts, about markets, about fundings, about trader psychology, folks, I've covered it all in terms of my nearly 6 years of coaching at FX Bootcamp. So let me know. Let me know what's on your mind. Have a great day, folks. Cheers.